Hey everybody, back with another dividend analysis, and today we're going to be looking at 3M Company, or MMM. Taking a look at 3M because I've actually had a couple people ask me specifically to do this stock, so I figured I would finally get those requests done. Without further ado, let's begin. As always, we'll start by looking at the dividend yield, currently sitting at about 3.33%. Not too bad. Very middle of the road for a dividend stock, especially such a mature, old company like this. 3 to 3.5% is very common for those kind of companies, so nothing too bad there. You're doing much better than the S&P, the wide market, probably doing about 2 times, maybe a little bit more than 2 times what you'd get in yield from that. Going down at the dividend history, we can see that we're currently getting about $1.48 a share, and going back to 2013, we're getting about 63 cents a share. So a lot of growth there, more than doubled. One thing to note here, though, is that the growth has slowed very dramatically over the last 3 to 4 years. We can see that we had a 20-cent increase, then a 17-cent increase, then a 9-cent, then a 6-cent, then back up to about a 20-cent. But since then, we've only been getting about, we got an 8-cent increase, and then really low down to 3 cents and 2 cents. 1 cent, excuse me. So really seeing like while there is definitely dividend growth here, definitely some appreciation, it has slowed significantly. A lot of the appreciation that was going to happen has probably already happened, so just keep that in mind. Going over to the numbers, we can see that they paid out about $3.4 billion in dividends over the last year, and we will see if they are able to support that. Starting with the free cash flow, we can do our free cash flow calculation. Checking the ratio of free cash flow, we get about 48% of $7 billion is paid out in dividends, just below our ideal range of 50%, so pretty good there. That means that, even if they, fell back another $500 million, maybe $1 billion, they'd still have enough money to pay that dividend. It wouldn't be ideal anymore, but still acceptable. So the dividend is quote unquote safe for the time being. If we look at their free cash flow history, we can see that we've almost doubled in the last 10 years, going from $3.85 billion up to $7 billion. But during the meantime, it's been a little spotty, going to $4 billion, up to $5 billion, back down to $4 billion, and then back up to $5 billion, and then up to $7 billion. So the growth has been, really over the last 4 years, the growth has been very nice, but you have to remember that last year, during the COVID times, 3M was a company that was still selling. A lot of people were staying at home. A lot of people were going to be using their products. So that $7 billion might be a little bit of a jump that isn't really justified in the long term, so keep that in mind as well. Next, heading over to the income statement, we can see that our net income for the last 4 quarters was just under $6 billion, and doing our ratio there, our ratio of income to dividends paid is 57%, so just under 60% of their income is being paid out in dividends. This one not in the ideal range, being over 50%, but well below our acceptable range of 75%. So if this $6 billion that they did fell back to about that $5 billion, they'd still be able to pay that off without too much issue. Looking at the income history, we can see that it's a little bit more stable, going from $4 billion up to $5 billion, a little stumble back down to 4, but then right back up to 5. This $5 billion number really seems like it's very stable. Really over the last, if we go from, 2014 to 2020, really $5 billion with a little hiccup there is what you're looking at. So if I was looking at this for the future, I would probably strike out this $6 billion and say that this $5 billion number may be a little bit higher, just with basic company growth with, GDP and inflation. A little bit higher than $5 billion would be a fair estimate for what the income would be looking forward. So what is 3M? What do they do? Really, it's hard to say what exactly they do because they make just about everything. A lot of people will know them for their household consumer products, things like tape, bandages, the things you use to hang on walls, stuff like that. But they have a lot of segments. They really sell just about anything you can think of that a consumer would need outside of food. And one interesting thing to note is their sales are about 50% American and 50% global. So they are pretty well diversified across the globe, doing about half of their business domestically and another half internationally. So if you're looking at this company, you really want to follow how they're doing both domestically and internationally. You really want to look at those product categories, see what's doing well, stuff like that. From there, is this something you should look at? 3M is a very popular dividend stock. As I've said, I've had people request this. A lot of people like this company. From a growth perspective, if you're a dividend appreciation investor, there is definitely a little bit of growth here, but as I said before, it has slowed, getting just that 1 penny increase from 2020 to 2021. So it's kind of rough there, but seeing that they're really only paying about half of their free cash flow and income in dividends, I wouldn't be surprised if they continued to raise this by a penny or two, unless that free cash flow and that income really they normalize around these numbers that they started in 2020, which is probably unlikely. I'd really expect 1, 2, 3 cent dividend increases. Anything beyond that probably isn't reasonable. They're not going to be getting the level of growth that they got from 2019 to 2020 over the next few years. That really does seem like an outlier year. From an income perspective, it's not too bad. 3 1/3% is nothing to shake a stick at, as some would say. It's not great, but it's definitely not bad. This is another one of those large dividend companies, very old, over 100 years old, has been paying a dividend for a long time, very stable. If there's a market downturn, they're probably not going to go out of business. This is one of those companies you can use as a stabilizing force in your dividend portfolio. It's still got a decent yield, nothing amazing, but it'll help stabilize, help diversify your portfolio, that kind of thing. One thing that I do want to mention about 3M is that I have looked at them before just personally over the last couple years, and I do have a few issues. They really don't seem to have any strategy or any vision as a company. I've read through some of their quarterly reports, and management just kind of seems to exist. They just kind of move along without any real big ideas. When I like to look at companies, I want to see what's the company's future, what's the company's vision, what are they doing. Some examples of that, like Verizon, they're really big on 5G right now and how they're going to upgrade all of their networks to accommodate for that. Whether or not I agree with that, the point is that there is something there. They do have a plan, and you want to see a company have a plan. Other companies, something like Smith & Wesson, where the management says that their plan is to release new products while they stay cash flow positive and keep their debt out of the way. Again, it's a plan. Even if it's not something you agree with, there is a vision, they have ideas, they know what they're doing moving forward. When you look at 3M, it's really just they're continuing to do what they did. Now, granted, it's been successful in the past, so that could be a good thing, but I really would like to see them take kind of an active role and tell investors, this is what we're going to do, these are our plans, so on and so forth. So should you buy this? It's definitely an option. I would say that they've been on the downtrend recently since they peaked over April to June. If you can get this for a little bit less than what it's at now, going back over like a 10-year spread, we can see they really like to sit around this 160 to 170 number. If you can get this for another 10% cheaper, if there's some kind of downturn for the stock without things going poorly, this could be a really good pickup. It might be a little overvalued right now, just being such a mature company. You're not going to get a ton of growth here, so just keep that in mind. But not a bad company by any means, just some very specific things you need to look at if you're thinking about adding this to a dividend portfolio. I hope that helps, and thanks for watching.